Give me all you've got. If you're prepared to break the silence, I'll be out in the sunshine, running beside the lions. I've been feeling down, but I've been looking.
Hello, welcome back to WinFS Trading YouTube channel, the only channel that has been optimized to make you rich trading the Forex synthetic market. In today's video, we shall discuss this Forex trading strategy will make you millions. 0 unit Forex signal trading strategy. This Forex trading strategy will make you millions. 0 unit Forex signal trading strategy. You have to stay to the end of this video. You have to watch through all the timestamp. You have to be very attentive and proactive for you to actually get the deep insight of what I'm saying, because this is ICT, this is inner circle trading strategy. Okay, I just want to release it because I see a lot of people have blown their account. But one thing you should know, no matter how you watch YouTube video, no matter how you watch free content and all of that, you still need to do something. You still need to add more effort. You need to be more practical, and there are 2 ways. You subscribe to our VIP signals, because you might say you can do it your own, but most times you miss those signals because they are all time dependent. Or you can enroll for our courses so that your knowledge become more stronger. People perish because of lack of knowledge, meaning you lose more when you don't have the necessary skills and knowledge. Okay, so that's by the way. If a signal is true, it will go in your favor without hitting the stop loss. Okay, this is just the description of the video. Later we go to chart to see it visually. So if a signal is true, it will go in your favor without hitting the stop loss. But it is hard to know a true signal. That is why I introduced this backtest strategy. It is actually a backtest strategy. It is called 0 unit strategy because the signal settings, the stop loss, the TP, the lot size are calculated in such a way that if SL is hit, you lose $1 or any minimum stop loss limit acceptable by your broker. If SL is hit, it means that the signal is wrong, not true. That is not true. You now have to repeat your analysis. Okay, you now have to repeat your analysis until you get the right signal. Okay, and then you can now over leverage. You can now use big lot size because you are sure now. In case where SL is not hit but the TP is hit, that means the actual TP you are targeting, maybe 1:2, 1:3, and all of that is hit. It means that it is a good signal. You will have to re-enter at a significant level of retracement, but with your normal risk appetite. This time you are not risking normally, you are not risking big, not just to lose $1 or something minimal. Okay, based on area or volume time characteristics of price action, the signal will go in your forecast. The more simple a market that is selling and you catch it selling, it will sell to in infinity of time. That's a theory. It will just sell, it will keep selling. And the market that is buying and you catch it at right price, at right entry, it will keep buying in infinity of time. That's the theory of area, volume, time characteristic of price action. Though price do reverse with speed, if it want to reverse, like where there is sharp price volatility and liquidity and price is reversing with speed, trend can change drastically. That's why you need to subscribe to VIP signal channel in order to maneuver those shortcomings or a kind of exceptions. Okay, I think if we go, by the time you pass through the chart analysis that I'm going to carry out to show you how such thing, like how this strategy is actually going to help you, you will learn more. So you don't need to quit watching this video. Keep watching. Let's go to the chart. You see what is going to happen. Market, later go to Forex and show you. So let's start with synthetic market. You see, this thing has to go along with your technical analysis, fundamental analysis, every other analysis, sentiment, and all of that. You have to do your normal analysis, okay? But then you know that it is hard to know the true direction of market. If it is easy, then everybody would have been rich. Like, you shouldn't be poor by now. You shouldn't be losing your money, okay? That's why, you know, I have to bring a solution, okay? So you have to do your normal analysis. You have to believe that your analysis is good, but then you have to apply this strategy so that you maneuver unnecessary losses, okay? So take for instance, this is H1. The cash 1000 is making lower lows in the H4 is making lower low, breaking levels. Now, can we get a signal in the M30 time frame? Okay, can we get a signal in the M30 time frame right now? Is it possible to get a signal? For me, if I'm to sell here, okay, if I'm to sell here, is not making sense. Even though it does happen, it's not a good entry. Even though at neckline, price do break and move, you know, fast and create new levels, but I don't trust this, okay? So I will check another asset. I just want to see where I can get a similar signal. Maybe I'll be using retest, break and retest strategy, okay? Let's see if I can get a signal, okay? Let's see. Okay, I would have bought crash 300 if it at least react to a line that has been respected in the past. It's far. If you go to lower time frame, you know that it's very far. It's very far. If you go to 5 minutes time frame, stay far. That alone can blow your account so much. If it at all it will go and retest the trend line, it have to go by 116 pips. So let's try volatility. Let's try volatility 150s. Okay, let's go to H4. Okay, now this market is a bear market. Within the current situation, we can mark this point, we can just connect this area, like there's probability of getting a sell. Or if you go to much lower time frame, it seems the price have to move a little bit higher, okay? It have to move to touch the trend line, but for the fact that the distance is not much, we can take it, and now the next thing, now I've gotten a signal that I'm going to sell. The next thing is to plan the trade. You will plan the trade normally, but you will plan your TP normally, and then you plan your stop loss normally, but the amount of dollar you are going to lose should be $1 or any minimal acceptable by the broker, meaning that you are actually going to be opening one position. Shouldn't be more than one position. Should be opening one position. You are just trying to test for reality of the signal. So you do your normal analysis. This was the previous high, okay, and my belief should be that price should not get to this high, okay? Price should not get to this high, okay? So you can place your stop loss at that high because price should not get there, okay? You give your trade room to breathe. So what will be your target? Your target should be, if we go to higher time frame, your target should be here at this lower price there. Maybe it's around 1:1 risk reward. It's because of the situation of the market. Most time it's not a matter of risk reward. It's a matter of making consistent profit. Okay, it's a matter of making consistent profit. So this will help you a lot maneuver some issues of losses here. So we have marked where we are going to put stop loss. As we are going to put it somewhere here, and our take profit somewhere here. Now let's go to the calculation of the lot size so that we lose minimal. Now from here to here is 2,148. Okay, the minimum lot size to be used on this asset is 1/1000. Okay, now let's go to calculator and check what we are going to do. Now I'm on my calculator, so if I divide $1 by $1 divided by 2,148, that will give us 0.00046. That is that will be 0.0004, approximately 0.0005. That is 5/10,000. You will see that if you check it well, if you convert, like, this is 5/10,000, because we have how many zeros here? We have 1, 2, 3. Then if we not pick after approximation, if we not pick at 5, you see that all these zeros will become 0 in the denominator part. That is the denominator part of the fraction. These zeros will become zeros. These zeros, these 3 zeros, and this 5 that we approximated from 4 become 0. So we have 4 zeros. Then this point will become 1. So it's 5/10,000, which is far below the minimum lot size, which is 1/1000. So when such thing happen, when your minimum lot size, remember the lot size is the amount you want to lose over the stop loss peep, which is this. Okay, over the stop loss peep. So I want to lose $1, but here the lot size I get is working against, like, is outside the acceptable limit of the broker. So what I will do is I will now use that minimum limit of the broker. Now if I use the minimum limit of the broker, I will just lose 2148 times 0.001. I will just lose $2.14. Okay, approximate $2.15. Okay, that's what I'm going to lose. You know, if you have a $20 account and you just lost $2.50, it will not pain you. It will not pain you. Just it is very stressful to do, because you will miss opportunity, but any day you cash one, it will be a massive profit. Are you getting me? So what you do is you now place the trade with 0.001, and you place your stop loss and place your TP. If peradventure your stop loss is hit, it means that the signal is wrong. Then what will you do? You repeat your analysis. The more you lose, like the more you use this 0 unit strategy and you keep losing, the more you approach your success, because a point you will reach, you will see the two signal. Like the two signal will be in such a way that it will be that one that will hit your stop loss. When you hit your stop loss, you will not be able to know where the market is going. Okay, based on area, volume, time characteristics of price. Take for instance, you want to stage here, and your take profit was hit here, but then you will be angry. I just risked $2. I just risked minimum. I just risked $1. I missed the opportunity. You didn't miss the opportunity. Based on area, time, area, volume, time characteristics of price, for the price to move and break this area on a retest, I told you in the document that after a significant retest to what? structural level. Even though I didn't put structure, that's what it should be. That's why you should enroll for our courses to learn. After it retests to a structural level here, we are now going to be using big lot size. Okay, we are now going to plan your trade as normal. You are not going to lose because you know where the market is going. A market that is going somewhere, we follow that direction for infinity of time. That's the theory, meaning that you don't need to be panicking. What if it reverse? The area time volume theory will protect you, like we encourage you. Okay, let me give you let's go to gold. I'll give you another scenario. Okay, that's how it works. Imagine you just risk 1,000. You have a $10,000 account. You risk $2,000 account on a trade you trust. At the end, the trade hit your stop loss. How will you feel? But if you risk $1 or $2 or minimum based on the broker, and the stop loss is hit, you will now know where the market is going. That thing that make that stop loss to be hit, that direction that make that stop loss to be hit, you need to wait and use your technical analysis or other analysis to see how to position and follow that direction. Okay, there is no too much ambiguity on this. You will think it is not true. It is true. Let me give you an instance. This is a scientific strategy. Let me give you an instance. You know, by right, this area was broken, right? This area was broken. Now, when price retests this area, it's supposed to sell. So as price is coming to this area, you place a sell order here. You sell here and then place your stop loss above here. So you actually, let's say you have $1,000 account, but you use 0.001, you risk $7.7. If you multiply 7,706 by 1,000 by 0.001, that is $7.7. That's what you risk, and your stop loss was hit. Or maybe most time your stop loss will not be hit, but maybe the price is maybe let's take for instance you place your stop loss here. That's why you need to be watching video to the end, because most time I bring up points in the middle that you may not even expect, and that point might be the thing that will save you. Now here, when price hits here, it is not able to hit your stop loss anyway, but it shows a significance of sell. People sold. Then you're supposed to know that when price come back here, more people will sell, right? What you do is you now replan your stop loss level. You can push it here and then risk big, because you already know where the market is going. Okay, the more you fail, the more you approach your success. That is the strategy. That is the secret behind this strategy. For the fact that I fell here, price didn't respect me here, though it didn't hit my stop loss while coming here, but it showed a significance of sell here. Then when it come back here, I'm going to sell. Then I will I will not do my normal trading, like risk more, put more money. I can risk $1,000 now in a $10,000 account without shivering, because I know it must happen based on area volume time characteristics of price. This time around, I'm cashing 10,000 pip while risking something like 5,000 pip. I'm cashing 10,000. That means that my $1,000 will become $2,000 because I'm placing my TP here. Then the $7 I risked before is nothing, it's zero. That's why it's called zero unit strategy. It's zero because it doesn't make sense. I use it to protect myself from unknown. Brokers will not like this video to go viral, but I just did it for my subscribers and those that will become my subscriber in future, so that they will know the power of WinFS trading. Though every video needs to be practicalized, and the only way you can do it, when you watch that video, try to get into VIP. Yes, trading our signal will help you a lot, because we are more powerful than ever. Like, this is our duty. We are specialized in it, so it will help. So let's go to Forex and see how this thing works. Let's go to Forex market. We shall use gold. We use gold and US start. We shall use gold and US start. This is gold right here. You have to do your analysis. Okay, you have to do your analysis. First of all, you have to do your normal analysis to know where gold is going. Then you have to apply this strategy to escape losses. Okay, for me currently, let's assume, you see, I bought gold and then see where I place my stop loss. But that is what let's assume that I want to enter at this signal here, like when I connect this point here, like what the price is doing based on the current path. Okay, price always respects the current situation in the market, not necessarily the past. So you see, when price came here, I'll be afraid to risk big because I'm not sure. So what I will do is I will place my stop loss here, and then I'll place my TP here. Okay, now you see, my stop loss will not be hit, but my TP is hit. That's why I tell you should watch this video to the end, because I'm going to be bringing random point that will save you. Okay, now stop loss is not hit, TP is hit. Then you will be why now? Why should I miss this big opportunity? Why is it that my TP is hit, but the stop loss is not hit? I should have risked so much. That is psychological issue. Now see, how to solve this problem is, once you have seen the truth and it's working, the area volume time characteristics of price action will help you to reenter and then risk big, because you are sure. Once you know where the market, you see, let me open your eye. If somebody is selling at this price, do you know that person, even if you have $1 million account, $2 million account, infinity dollar account, that person will blow all the accounts if he keeps selling. He will sell here, his stop loss will hit, he will feel like it will be this place, it will sell. His stop loss will hit, it will be like it will be this place, it will sell. His stop. See, price follow area volume time characteristics. That is price trend. Price action trend. Once price is making differential swing, follow the direction of that swing. If it is making higher high, follow the higher high. If it is making lower low, follow the lower lows. That is one secret about trading. So when you go to lower time frame, maybe your TP, actually, let's say this is where you place your TP, because you are placing your TP where price is likely going to reverse. So you place your TP here based on this internal structure that if price get there, it might reverse against you, right? Then you place your TP there, and your TP is hit, and you'll be like, this is a good signal, I should have risked more. If you look at this part, price was making lower low, but if you look at this part, it is a change of character. It's not doing the same thing. It's not doing. If you check the swinging system along this path, it's different. The differential swings, they will have the price swinging. It's not swinging higher high instead of lower low. So you're supposed to know that this is the next impulsive move, because gold is already a bull market. This is the next impulsive move. Then what you need to do is to wait for proper retracement to certain key level, like here. Price keep retracing here without breaking it, retracing, and even making small higher highs. Those small differential swing are not something you should play with. They are reasonable, no matter the time frame. That price couldn't break here is significant, shows that the market is buying. So you can buy here and put your stop loss below here. You see, despite you enter at I don't know, you enter at the middle or at like you enter at late price, you still succeed. See, if a plane is going to crash from a height, are you getting me? If a plane is going to crash from a height, from that height to any other point along its path of falling or crashing, no matter what people inside that plane tried, they will still crash. Okay? Also, the plane that is not crashing but is going to the destination, it will reach that destination no matter what people inside is doing. Once the system, the mechanical system, electrical system, every other part are working well. Are you getting me? Since it's buying, it's going up, anywhere you enter, you will succeed. But if you do against it, you will be ripped. Are you getting me? It's a very complicated science or idea, but it's going to help. Take for instance, I want to sell gold here. You know, a lot of people will be pressurized. They want to sell gold. I'll just risk $1 and place my stop loss above here. Like gold can is every there are a lot of like any technical area that you think like any swing zone is likely going to be an opportunity. So that is probably that price can swing low. This is a swing high. Remember that markets behave with swing interactions, highs, low, highs, low. Every low creates a high and every high creates a low. So that is probably that this high, this might be a high that will create a new low. Okay. It might create a new low and I can likely going to put my TP here. Like place my TP near a high that has been broken, because when market is making higher high, it's going to retest previous highs. Okay, so I can place my TP here. Okay, and then but to see that the market, the signal is strong, then place your TP at a low, not a high. Place it at a low, like a low in such that if the price is coming, it will break a low. So if price is coming, it will break this low, so it will come to here. That's because you don't want to trade. You want to trade against the current trend. So you don't want a small move, you want a big move. So you want to know the truth where the market is going. Make sure you take a signal that will break a level. So you want a signal that will break this low and come to maybe here. For price to break this low, it means change of character. You can even put your TP somewhere here. Okay, you want to know that it is selling. It will take your time, it will be painful, it will be very, very boring, but in the long run you will succeed. If this market is going to sell, it will not just sell here and end. You see, all these sell that end, all these short sell that end are fake sales. You see, you notice at the end the price break and make higher high. So if this thing will sell, let it come and hit our TP here. We will believe that it will sell. Then after some good retracement, we now risk big because we have known the truth. Now here you are going to be risking something like 8 pip. Now 8 pip, I want to risk after you have done your normal risk management, like after you have done your normal price action. I want to risk $1. Let's try to see if we can risk $1. We are now risking $1. First of all, look at the stop loss pip. Is around approximately 9 pip, because 8 point something is approximately 9 pips. Okay, it's about 8.8 pips, or we use 9 here times the pip value of gold. The pip value of gold, depending on how you are counting your pip, because here I want to calculate the point and then multiply by 10 to get the actual pip. That is if the change in price, then you multiply by 10 to get the actual pip, and then the pip value now is $10. You multiply by 10 again. So the lot size is the amount you want to risk divided by the product, like divided by the product of the pip value and the pips. Okay, so now you have 0.001, but the broker does not accept 0.001. So what do? You adjust your risk. You can adjust it. Let's try $2. It's giving us 0.002. It's still not reasonable. Let's try $8. Not reasonable. Let's try $10. Yeah. Let's try $9. Yeah. At exactly $9, where we will have 0.01. So we are going to risk $9. It is assumed you have something that is up to $100 account for you to use this strategy. So we are going to risk $9. Okay, so you are going to sell gold. You sell gold here. You put your stop loss at that level that I have marked. Okay, at this level, you risk you actually risk 90 pips. Okay, it was here. Then that's why you have to be, as price is approaching some level, you have to be doing your calculation fast. Okay, it was around 9 points, which is 90 pip. Okay, so you place your stop loss and your take profit will be in such a way the signal will create level, like will break all this swing, all this lower higher lows, higher low, price have to break it. So you have to place TP here, let price go and hit that TP. If it fails to hit that TP, rather break a level, rather break a level to go and hit your stop loss, it means it's against you. You now wait for good retracement, risk big this time, and then buy this good, risk big, buy good. You will never lose. I'm telling you the truth. This is a I don't know, this is high order knowledge. This is the inner circle, more than inner circle. This is metaphysical knowledge in trading that I just released after I noticed people are just blowing their account and they're crying. Make sure you subscribe to my VIP signal channel. Make sure you enroll for my course so that you will never lose more money. You will not miss opportunity. You might be a good technical analyst, yet it's not your destiny. You are not talented to make it in that area of life because you are not always on the charts. Every time 247 the light, electricity, network, internet is active in my area, like in my trading room, every day I'm on the chart, spotting for the best signal, doing all these analysis, all these strategies that are being made to my students, like applying them to get the best signal. You can see gold is buying. Okay, do you know how many backtests I did before I entered this trade? That is the type of signal we lay in the VIP. Okay, backtested signal that can never lose. Change your life. Bye for now.
If you're prepared to break the silence.